Once again this year, politics set the pace on financial markets. Elections in the UK and France, Trump stalks Merkel and the rest of the world, while a new conflict is emerging in the Middle East. But in recent weeks, the rally has continued on the stock markets. So either the risks are too small or the opportunities are too big. We will shine some light on that. And these are the topics in our Werthstein Index update. New all-time highs on the stock markets while the world has not become more politically secure. Will the US Fed once again raise the interest rates on Wednesday, although the US economy has been sending some question marks? And when will something positive coming out of the White House? Or is it going on with protectionism and isolation? The last has unfortunately become the keyword these days.
Qatar, a country with only 2.3 million inhabitants, but currency reserves of over $300 billion. The tiny, super-rich state in the Gulf is being isolated by its neighbors. And this man is also becoming more and more isolated. US President Donald Trump has been stirring things up against NATO, the EU, and especially against Germany. According to him, there's no such thing as climate change, and the climate certainly doesn't need protecting. And soon Great Britain will also be a bit more isolated, at least from Europe, even if Theresa May now has problems that are very different from preparing the Brexit.
Now, of course, we have to go to Giles Keating, president of the Werthstein Institute in London, where Theresa May has got the yellow card, no question indeed. What does mean the election result for the UK?
Yeah, look, we'd had some hints, but this clearly was unexpected, and we're seeing quite a lot of uncertainty in financial markets as a result. And that's going to continue because we don't quite know what kind of government will be formed or what kind of direction it will go in. So I think the answer is short-term pretty confusing for investors with a lot of risks around.
As far as the stock markets are concerned, you have probably been a bit too cautious in the past few months. Do you stick to it?
Look, Stefan, I have to agree. I have been a bit too cautious. I've been wrong, but not very wrong. You know, the US stock market is only up about 3% since March, and the German market, although it also hit new highs, it's actually fallen back from there. And if I look, people are withdrawing money from the US market, and there are speculators, big ones, who are taking bets that the market's going to come down. So I stay pretty cautious here.
Let's ask Valerie Planiol, Werthstein Institute Fellow in Paris. Nor are the data from the US economy quite clear. Will the Fed still react on Wednesday?
Yes, I really think so, but it's not only about rate hike, it's also about tapering, that is reducing the size of the Fed balance sheet. And many governors are really ready to do that because some of the market, especially the housing market, is getting very tense at this point and prices are going up. So in a nutshell, as long as Trump does not deliver on a huge spending in the budget side, I think the Fed can continue to normalize in a very progressive way.
Speaking of Donald Trump and his full-bodied promises, let us go to Dominik Müller, financial analyst at the oldest private bank in Switzerland, Rahn+Bodmer. Thank you for your time. Grüezi to Switzerland. Hello, Dominik Müller to Zurich.
Hi to Frankfurt from Zurich.
Not a small, but a really big tax reform has been promised the new US president. Is it still going to happen?
Well, Stefan, I truly believe it will happen, but if it will happen this year, there is currently certainly unknown. It might happen only next year, but let's not forget the support internally for Trump within the Republican Party is softening. And moreover, many Republicans are certainly not supportive of any large budgetary shortfall. So it will come, but when, we'll see.
And how long are these hot stock markets prepared to wait?
I would say not too long, maybe a couple of more months, but it's very clear that after the recent rally and the susceptibility of specifically stock markets to setbacks is increasing.
Now let's look at what's going on in the Middle East. Robert Rothman, Werthstein Institute Fellow in Zurich. How dangerous is the new crisis in the Gulf?
I do think it is dangerous, especially in terms of regional stability. I also think, however, that it can be contained to the region. And with the stakes as high as they are, I think the incentives to find a good resolution fast are higher too.
Okay, Robert, looks like that the markets have the same opinion, but what are the driver behind this trend?
Well, I think very clearly central bank action. Recall that the balance sheets of the Bank of Japan, the Fed and the European Central Bank continue to expand on average, which is driving bond yields lower and stock prices higher. And if one considers that inflation rates are actually lower than expected, the incentives to shrink the balance sheet are actually lower than at the beginning of the year.
And now from Robert Rudman to another Robert, to Robert Halver, capital market analyst from Baader Bank and Werthstein Institute honorary fellow. You were very optimistic about the stock markets at the beginning of the year. So you were right. Are you still optimistic?
We still have big problems. We've got Trump and we certainly have problems in Europe. But where the need is greatest, the ECB will help the central banks. They'll continue with a very loose monetary policy to ensure that money can't flow into the interest rate markets where the interest is miserable. It'll go into the equities markets.
In January, an 8 on the scale from 1 to 10. How is your voting this time?
Summer's just around the corner, then things will calm down a bit. But it's still a 7. There's no alternative to shares.
Thanks, Robert Halver. Let's move on to the new Werthstein Index. It's a lively representation of the Werthstein Institute's market opinion. It expresses the individual voting members' expectations for the development of global stock markets over a time horizon of up to 3 months as the average of their votes on a scale from 1 extremely negative to 10 extremely positive. Look at the current votes.
Well, I maintain my vote and it's a 7.
I'm actually more positive this month and I'm increasing my vote from 3 to 5 because with lower inflation and expanding central bank balance sheets, I don't want to be on the wrong side of a bet against central banks.
Well, I'm edging my vote up from a 2 to a 3. That's still pretty cautious, but it is true that the economic data have been fairly robust and the corporate results are looking good. Robert has moved his vote up from a 3 all the way to a 5, and Valerie sticks at 7. So that's a total of 15, which makes an average of 5. And that's up from 4 last month. So the Werthstein Index is on 5. It's certainly not a very, very strong index. It's in the middle. It says be cautious, but there are still some good opportunities out there.
Let's go back to Dominik Müller from Rahn+Bodmer. If we now take the 5.0 of the Werthstein Institute, similar to your direction?
Generally speaking, yes. I will give the US equity market a 3, given its high valuation, and European equity markets a 5, so that is a blended 4, yes.
So let's summarize. We have seen new all-time highs on the stock markets, but no really big movements in the last couple of weeks. And you should always weigh opportunities against risk on the stock market. And the Werthstein Institute agrees other circumstances would be more attractive to push up the equities from here. So we stay cautious. If something should change, we will come back to you latest in 4 weeks with the next Werthstein Index update.